Welcome to Theo Trade. This is Don Kaufman. Here we are doing the weekend update. It's July 16th, 2016. First, we start looking at the S&Ps, which have had the continuation of the rally. On Friday, of course, right before the futures closed, there was a little bit of sell-side activity, predominantly because of some geopolitical risks. The attempted coup in Turkey really caused the futures to dip right at the close. Otherwise, the rally, persistent. You know, if you're looking at this and you go, well, it faded a little bit on Friday. Hey, nevertheless, we still hit 217.01. For the most part, every day this week, we saw new highs and all-time highs. Now, I kick off discussion of the coming week. And again, the coming week, coming into the week here of July 18th, it's earnings season now, and earnings season is going to be in full swing. There's going to be a few bank stocks that are going to release Monday morning. Be aware of it. So you've got Bank of America coming out Monday morning, could cause the futures to rock a little bit. Goldman Sachs coming out Tuesday morning. You know, the likes of Chipotle is going to be up on Thursday. I don't think that burrito is going to move markets. Nevertheless, people love to know when some of the earnings are coming out. IBM is actually coming out Monday after the bell. Microsoft's on Tuesday after the bell. Netflix Tuesday after the bell. Those are the ones to me that predominantly matter in terms of earnings. Now, much more importantly, so we're looking at this rally here, which has just been unforgiving to those that are short. But I think there's something much more important to discuss kind of on this, weekly update over here. So what we're going to look at for just a moment, I'm going to use the spiders. I think the spiders sometimes are just a little bit easier to understand, kind of interpret, rather than using the SPX, which is, $2,161 product. Well, we're going to use roughly a $215 product. And one of the things to me that really stands out is over many years of trading, I've been one of the largest advocates of premium selling. And lately you've heard me say, I'm not a huge advocate right now of selling options premium. And I want to get into some details in that regard. So to do that, we're going to talk about what's called the EM, or expected move. For those of you that are unfamiliar with expected move, if we take a look at a distribution curve, for example, on the spiders. And let's say the spiders, right now they're trading at 215.60, or 215.83. Let's just call it an even 216. Okay. The expected move, what is it? Okay. Well, you can look at an expected move for a week, for a month, even for a year. The expected move is what the options market is anticipating the move in the spiders to be. For example, if we say expected move is plus or minus $5, it means, roughly speaking, we can move up about $5 or down about $5. All right, we do some quick math over here. All right, so it takes us to 221. It's $5 to the upside. Or where does it take us to the downside? Maybe 211. And that's it. That's all expected move does. There's absolutely no directional bias to the options expected move. Okay, and we are supposed to stay in the expected move range approximately 68.3% of the time. Now that's equivalent to one standard deviation. And immediately, whenever I say, 68% of the time, somebody always, asks, well, what happens to me the other, 32% of the time? Okay, don't worry, you're going to find out. But as of late, when we look at this, what can you even use this for? Well, those of us that sell options premium, you really need to know stuff like expected move, because if expected move is incredibly low, for example, that kind of means the market's not expecting much movement. Okay? Lately, it has been incredibly low. You can look at the VIX and you can say, well, the VIX is volatility. Volatility denotes expected move. Kind of one and the same. Now, I'm showing you this in the spiders, but volatility is low in almost every product on this screen. Even some of the ones coming into earnings, volatility is still relatively low. The point that I'm trying to make with this, have you looked at the expected moves in a product like the spiders and compared that to, are we really moving that amount? And I'll give you an example here. The spiders this week went from what? About 215, okay, 83. And that was, where they closed. Okay, so we count back. Here's 1, 2, 3, 4, 5 trading days. On this trading day, what were they trading at? So on Monday, where were they trading at? Okay, to where did they go? And here it looks right in the neighborhood. Where did we close over the weekend? Maybe around what? 212.50. So we do some quick math over here, and what are you looking at? Well, you can, at a glance, we've moved beyond $3. The question is, what was the market anticipating the movement for this past week? Okay, and that's kind of the question. I use this $5 as an example, but I want you to get a feel for this because the market is telling you something right now, and I don't think a lot of people are listening. So for the answer to this, I go to the Analyze tab on Thinkorswim, and this is something that I've used for years to assess, all right, whether it's time to be a buyer of option premium and or a seller of option premium. And I want to, I don't just throw a statement out there without qualifying it with something. This is not like, well, I think we're going to go up or I think we're going to go down. More importantly than that right now, you got to realize, okay, what the market is doing, what the market is actually saying, what the options market is saying right now. Okay, I went into the Analyze tab and I went to think back. Now, this is end of day data, but that's fine. And the date that I went to is, here we are. This is today. This is July 16th, right? The next trading week is, of course, going to be July 18th is going to kick it off. But I went back to, for instance, last, Sunday. Because I wanted to look a week in review. And the market, all right, was roughly at 212.65. All right. Where did the market ultimately dictate that? Well, where did option pricing say we were going to go? And here we go. We opened the week, all right, roughly at 212.65. The expected move, and that's what this is in parentheses right here. The expected move, and I'll write it out for you, is plus or minus, okay, $2.71. Yeah, I'm just rounding down. That's okay. All right, roughly 270 is the expected move. Did we move further than that? The answer is yes, we did. Which tells you you'd rather be a buyer of option premium than a seller of option premium. There's expectations, and people always say, well, if you always sell options, you'll always make money. I'm sorry, that is not the case right now. We moved further than we were expecting to move. Okay? Well, did we do it the previous week? So I started going back and doing a little bit of homework and started counting out days over here. And there's no easy way to really do this. Everybody wants, the easy. Well, guess what? I'm making it easy for you. I'm doing the homework for you. Okay? And what I'll do is literally sit here and count back 1, 2, 3, 4, 5 days. Okay. So that's 1 week. In this particular week, all right, we went outside EM. So that I went back 1, 2, 3, 4, 5. Okay. In this particular week, it was close, pretty much at par. The week before that, okay, without unequivocation, we smoked expected move. We've actually had a lot of occasions lately where we're moving further than the option market has been anticipating. And now I want to take you and look at this coming week, because this coming week, again, this is last week, right? Last week was only expecting a $2 and about 70-cent move for the full 5 days. This coming week, I know it says 6 days because we're on Saturday, but promise it'll be a 5-day week. It always is, unless of course there's a holiday, in which case it's a 4-day week. But the expected move is $2.38. Are you kidding me? I ain't selling nothing, no way, no how, with a $2 and roughly 38-cent expected move. Ladies and gentlemen, the volatility, it doesn't get much lower than that. So what do you do? If you want to trade, what do you do? Okay? And the reality is there is an incredibly good opportunity here to be net long gamma. And I've explained this before, and people are like, I have no idea what gamma even is. Bottom line is, in a week like this, intraday and throughout the course of the week, it's okay to buy options. You can buy options this week. If you're going to do it, I'd probably buy them, get rid of them. I wouldn't hold them necessarily overnight. But what's amazing is when you look at the at-the-money options here. So here we are at like 215.83. So we look at somewhere around like the 216, or the 215.50 strike. The at-the-money straddle is trading for roughly just over $2. I mean, you could buy an at-the-money straddle for $2, and then if we move plus or minus $2, you're likely to be profitable. You're not going to kill it out there, but if we move over $2 plus, you're going to make some money on the week. It's an interesting idea because what happens if you get Microsoft later in the week? They're like, yeah, turns out Windows 10 ain't what we thought it was. I mean, please, we've all known that before. They can't even give the thing away for free. So what did? They started actually pushing it on people's computers. But I'm just giving you an example over here of this is the kind of homework that makes you money in the market. Okay, I know I pick on charts a lot, but I'm going to tell you something. All right, nobody knows what's going to happen out here. Right now, okay, there's geopolitical risk. There's the ECB this week. If you're unfamiliar with the ECB, all right, what does that mean? There's an ECB announcement. It's the European Central Bank, headed by Mario Draghi, better known as Ivan Drago, where I come from. Anyway, anything is possible, on a day-to-day. And again, there's a lot of news coming out. There are earnings events, and we're just kicking it off this week. I mean, hey, who doesn't like a train wreck, right? Go watch Netflix. That could be a train wreck to the upside or the downside. Nevertheless, with all of the geopolitical risk, the news announcements, the markets are incredibly efficient. Directional bias has never been more difficult, but you got to know whether to be on the buy side or sell side of options. In the short duration, okay, I'm telling you right now, I'm on the buy side of options. And that's shocking for me to say. I'll even go into the SPX and give you kind of one final note as we kind of kick off the week here. If you take a look at the SPX is even more specific. It actually prices risk for 4 days because there's a Wednesday expiration and a Friday expiration now. The volatility between now and like Wednesday expiration, it's only indicating a $16 expected move. People, we've been moving $16 a day, right? The volatility is getting squashed down right now because the whole world is seeking any returns, okay? They're selling options premium. I'm telling you, we look too efficient. The market is just too efficient right now to want to be a premium seller. Volatility, it doesn't go down from here. Therefore, it can only really go up. You'd rather be on the buy side of options. You got to be a little bit more nimble to be on the buy side of options. But even when I go out 100 days, a 16 vol, you kidding me? I want to buy options even 96 days out. You buy options and hope the world blows up, or at least the financial world for that matter. All right. So think about this in kind of context of the market. Other stuff, of course, looking at over here, a stern warning to you. If you're in any kind of currency trades, those are being heavily manipulated right now by what? Where do you want to start? Bank of Japan, the ECB. Okay. I'll go on and on and on about currency risk out there. Watch your head in currency. Doesn't matter whether you're long, whether you're short, whether you're trading the yen, whether you're trading the dollar. There's one thing that I do not like to see, okay, our clientele get involved in, and that's a trade where there's not only complete and utter unpredictability, the market's having a difficult time pricing volatility in a lot of the currency products because they're being so heavily manipulated by some of the sovereignties out there. Again, this week, we're really getting into the earnings swing. So we'll look at some trades in Microsoft, Netflix, maybe even like IBM. I'm not a big fan of Chipotle. People like to trade CMG. Good luck to you. The bid offer spreads in there are so wide you could drive a truck through it. And Goldman Sachs, of course, coming out Tuesday morning. Who doesn't want a train wreck in there with that? I bid you farewell this weekend. Thanks, everybody, for joining us here at TheoTrade. Be back on and in the chat room all throughout the course of this week. Have a great weekend. Bye-bye.